Welcome to episode 21 of ICT Mastery Mentorship. In this episode, we're going to be going over top-down analysis and daily bias. Okay. The day that we're going to be looking at for this, I guess you could say episode or end of chapter lesson, we're going to be looking at the day of 29th of January, 2025. Okay. Or January 29th, 2025. Okay. This is the day we're looking at. And during this day, Wednesday, as you normally know, on Wednesdays, every once in a while, there's FOMC. Okay. If you don't know that already, you can go to Forex Factory and check it out yourself. But FOMC is a gigantic news event, maybe stronger than non-farm payrolls, but they're like close to the same. But I'll say non-farm payrolls is definitely stronger. But this is a day of the economic news event that we're going to be looking at, and I guess you could say predicting in hindsight. Okay, because it's like, oh, it's hindsight, you can't like, whatever. Okay, I'm here to teach you. I'm not here to put it on replay mode and say, oh, look, we just made a trade. We're looking in hindsight. I'm just teaching it the way my mentor teaches. Okay. So top-down analysis is simply going to higher time frames, which is the daily and above, or higher time frames as in like hour, 4 hour daily to get your daily bias. Okay, that's top-down analysis. Top-down analysis is going up and then coming down. That's why they call it top-down analysis. Okay, you go up to then come back down to take your entry and to get a correct prediction or correct bias on the market, which is where you will get your daily bias or how you will get your daily bias. Okay. So what I do personally, remember, you don't have to do everything like me, but what I do personally is I jump onto the weekly. Okay. I jump onto the weekly to start off my top down analysis. I see what's going on in the weekly. Every week I'll check the weekly. Okay. But for example, if it's a new week, I will go on to the weekly and then I just drop all the way down and look at all the time frames to see what's going on each time frame to really understand, like, the how the time frames are sticking together, how they're acting, like what's the lore behind price on each time frame, what is going on. Okay, so what I do is weekly, daily, 4 hour, 30 minute, 15 minute, and then I go all the way back down. Okay, but if you want to say in terms of analysis time frames, my analysis time frames would possibly be the weekly all the way down to the 15 minute. Those are my analysis time. Sometimes I'll take trades on the 15 minute also, but for top down analysis, it's 15 and higher. Okay. But no higher than the monthly. I don't go higher than the monthly. Sometimes I do. Sometimes I do, because if we can see here, price is coming to a fair value gap and it is kind of respecting it. So yes, the monthly can be useful, but I personally don't use it. Whatever you feel comfortable with using, if you feel comfortable with using the 12 month, PA yearly, or if you feel comfortable with using a 2 week, I don't use a 2 week. If you feel comfortable with doing certain things that I don't do, I'm not saying don't do it. Okay, do it. Because if it helps you and you trust it and it works for you, do it. Don't listen to me, but on certain things, don't listen to me. Okay, I'm not saying follow everything I do, but if something's better for you, like for example, if you don't go all the way to the weekly, instead you want to go to the monthly, hey, do that. I'm not saying don't do it. But anyways, going back into it, I go from weekly all the way down. Okay, that's top down analysis. Looking at the week, looking at the daily. Okay, what's going on here? Looking at the hour, what's going on here? Okay. That's understandable. 4 hours going on there. You get what I'm saying. Just looking at each time frame, going up, then down. So weekly, for me, it's weekly, then lower to understand what's going on in order to get your daily bias or your bias on the day. Okay, let me clarify something real quick. When we say daily bias, okay, we are referring to New York session. That's what we mean by the day. Okay, not Asian, not London, the day. Whenever someone says, "What's your daily bias?" They're referring to what's going to happen in the New York session. That's what they mean by daily bias. Okay, they would say if it's any other session, they would say, "What's your bias on Asia?" When you get into a Discord server, when you get into a certain community that's full of ICT traders, they'd be like, "What's your bias on Asian? What's your bias on London? What's your bias on this macro?" But when they say daily bias, they mean New York session. Okay. That's just how my community refers it to, and how I've seen a bunch of other communities refer daily bias as. When it comes to New York session, it's daily bias. What's your daily bias? Oh, I think it's going to go up. They're referring to New York session. You already know New York session, 8:30 to 4, 8:30 a.m. New York time to 4 p.m. There it is right there. So we're going to start all the way from the weekly. I'm going to do what I do because I don't know what you're going to do, but I'm going to do what I do. Okay. I go straight from the weekly. We clearly know that we are bearish. Okay. If we look, price is respecting fair value gaps. It's respecting fair value gaps. We came to another order block here, and we are currently respecting that now. We took out a point of liquidity here. See that right there? That point of liquidity. If we go on the daily, it looks more, I guess you can say, not really extravagant, but it's more visible. Okay, but it's daily. So see that right there? Have that high here, and we also came to that. Did we come to that? I don't think so. No, barely, just barely. But we came into this high here, purged it. Well, it didn't purge it here, but we created equal highs. Okay, we rallied back up, shifting the momentum in price, created equal highs, price smashed through it, came back down. Okay, that's what it did. That we were understanding, we're processing that that's what it did, right? Okay, now let's jump back on the weekly to see what's really going on. So on the lower time frames, we know that price has came higher. It came higher to break those equal highs that we saw on the daily. But what are we going to do after that? Like, why is that happening? Remember, lower behind price. Why? Like, what is going on? We know that price is clearly bearish. Okay, that the first thing is that look at it, look at this. It's clearly bearish. Okay, we're respecting fair value gaps. Tap down, tap down. And we're coming back to another institutional reference point, which is this order block here. Okay, so we came in purge liquidity from this high here and another high that was on the daily, coming into this order block. See that? Do you see it? I think you should be able to see it, right? You're smart. Have another return into this order block, okay? Because we haven't officially displaced away from it, okay? If we haven't displaced away from a certain institutional reference point, you do not want to say, oh, okay, it's over with. Because as we can see here, we didn't displace away from it. We came into it multiple times and we did not reject. So this order block is still valid until we displace away from it. So jump back down on the daily. These two highs here, they got purged. As they were getting purged, we came up into this order block, okay? And then if we look at our dealing ranges, where are we? We're in a premium. So just from looking at this here, right, we could obviously, I guess you could say, put together that we have enough confluences to confidently say that the market is bearish, okay? So if we know that the market is bearish, when is it going to be bearish? When are we anticipating bearishness? That's when we drop down in the lower time frames to see even more confluences to anticipate when we're going to be bearish. Okay, remember, we are highlighting this day here, wherever my line is. We're looking at this day right here. Okay, right there. That's where we're looking. That's what we're predicting. Okay, that's what we're, I guess you could say, analyzing. Okay, that's the day that we want to see play out. Okay, that's the day that we want to see play out. So this is that order block on a higher time frame. This right here, this little blue box, that's the order block. Let me move this out the way. This is getting a little distracting. There we go. Move it out down here. That'll be fine. All right, so let's look here. Okay, as we were reaching higher into a premium and reaching higher into this order block here, we can see that price is consistently purging liquidity. Okay, consistently purging highs, purging highs, purging highs while going into a premium. Okay, when we see price not necessarily shift, okay, not necessarily shift because that's something different, but when we see price start breaking lows after we see consistent high breakage, that's a sign that price is about to shift lower. And did it shift? Yep, there's your market structure shift right there. See that? You know, super institutional, isn't that? They're very institutional. If I do say so myself, that's very institutional, right? So we got let's see here, we got a liquidity purge right there. We got a liquidity purge right there. Do we close above it? Nope. Close right below, and we come right back down. Look at that. Creating a market structure shift. What do we start doing? We start taking out lows. You see that? Just on the left side of my screen while I mark this up, you can see low taken out. Another low taken out. See that? So that's indicating a shift, okay? Now let's drop down to the even lower time frames, okay? Now this is where I turn on kill zones. Around here, this is where I get to turn on kill zones, okay? So this is where the market structure shift occurred, right here. Well, this is when DeepSeek AI came and completely just shattered the market. Now, I'm not necessarily shattered, but it threw off the market a lot. So it really confirmed bearish anticipation, really looking for honest. So, and then we also came to this order block too. See these consistent candles? See these? If I turn kill zones off, you can see that this is an entire order block right there. This entire thing is an order block. Really? Yes, it is. Did we come back into it? Yep. Do that. We came into it, started consolidating. Okay. Now this is where we drop even lower. Okay. We're looking at the price delivery cycles now. Okay. So going into here, looking at Asian and London, we can see that during Asian, we accumulated. We accumulated. We didn't break out of anything. Okay, we literally accumulated the entire time. Accumulation. Okay. Then we finally expand. Expansion, and we keep expanding. Okay. London lunch comes through 5 to 7. London lunch comes through, and what do we do? What do we do? Okay. Because remember, this isn't finished. This one over here, this consolidation expansion, this isn't finished. It still has one more phase. It still has the retracement phase, and that happens here. But just let me cook real quick. Okay, give me a little second. Price accumulates. It expands lower to reach a discount to go higher. It goes higher, but for what purpose? To retrace and finish this old price delivery cycle. And when we retrace, what do we come into? We come into this order block or the rest of this undelivered fair value block. If you notice, we come into a premium of this dealing range also. Or if you want to say optimal trading tree, yes, we also came into an optimal trading tree. After that, if we jump to the lower time frame, let's delete this line. If we jump to the lower time frame, we can also see, let's turn off the kill zones real quick. We can also see that price starts, moving back and forth, showing that there's about to be some sort of explosive movement happening. FOMC comes out at 2 o'clock. That's your news event, and boom, there's your buys right there. So boom, pretty nice, isn't it? So that's really what we're mainly predicting, okay? Because when it comes to economic events, what you don't want the thing you don't want to do when it comes to economic events is trade before them. What I mean by trade before them is the day before and that day. Okay. Now the reason this was okay to trade this day was because of the DeepSeek AI that happened before then. Okay. I'm not going to zoom all the way out for it, but the DeepSeek AI basically just kind of injected liquidity into the market, causing the market to move faster. But in any other circumstances that's not this, to where we have some stupid something happen that makes the market drop for no reason, you can trade. Well, you shouldn't trade it. You shouldn't trade it, okay. But in this case, you could. Okay, you can trade before it because we see here we have a nice rally. This is the retracement to have this, so we can have this. Okay, that's the retracement, so we can have this move here. Okay, we rebalance this fair value gap, come right back up, and then we just finish off the day by consolidating. And here we go, we're still consolidating. I think the market literally just opened 5 minutes ago. Yes, it did. It's 6 o'clock. But that's top-down analysis in daily buys, going from up all the way down to finding out how you could have got your entry, taking your entry, and then boom, there's your daily buys. Okay, you saw that, right? You saw how we went all the way to the weekly, we went all the way up here, and we made our way all the way back up until we finally got to the conclusion of why the FOMC day, which is today or the day that I'm recording, on why it delivered that way. Okay, that's top-down analysis and daily buys. You use top-down analysis to get daily buys. Daily bias is your bias on the day, aka New York session, and top-down analysis is how you get your bias. Okay. I hope you learned enough from this video. I hope you learned a good amount. Okay, that should help you in your, as you can say, advancement in growth when it comes to learning ICT concepts. And I'll see you on the next one. Peace.